Mr. Sanjay Jain. He's the Group CEO of PDS. Joins in right now with his thoughts on this subject and probably more. Sanjay, thanks so much for taking the time out. This is Neeraj here. Good afternoon. Would love to understand, Sanjay. There's so much talk around this largest company in Bangladesh now getting closed. The China plus one theory, Bangladesh losing its underdeveloped status in the EU market in 2026, and what all of this could mean for the textile value chain in India. Can you share your thoughts on this?
See, for now, yes, there were two spans of few days of disruptions in Bangladesh, but for now, everything is working pretty much normal on ground. Like we have two factories running full this quarter, already filled up next quarter, already filling up for Q1 next year. I think the local governments have also taken measures. ADB has stepped in Bangladesh to give them 600 million of grant. Exports in Bangladesh in July to November have been up 11% as compared to same period last year. So I would say there has been some disruption, but we really can't term it as a crisis situation. There's stability that has come in. But having said that, if we talk about the impact on India, I think these short-term disruptions may happen from time to time. There was similar situation of economic crisis in Sri Lanka in first half of 2022, but then normality came in thereafter. But the measures that the government of India took in mega textile park, in PLI incentives, the strong financial markets enabling, strong capital raised by the companies in India, I believe that textile companies are here to benefit. If at all there is any noise in Bangladesh, then from a retailer sitting in UK and US, from their allocation of sourcing, India should benefit. But companies which have been financially stable in Bangladesh, they don't run the risk of their business going away. So India would benefit, but I don't think Bangladesh is in any kind of dire state as we all are terming it to be.
No, not at all. The only idea was that there is one large factory, I believe, which was shut down, and therefore the conversation was about how there could be incremental business and some portion of that business which could shift to not just Indian companies but other companies as well. So well-run companies could well get the business even if they are in Bangladesh. We hope the best for them. The only question is, do you reckon that over the next 12 to 24 months, Indian textile firms stand to gain from the European and US stores? This is a story that has been hypothesized many times in the past. I don't think it's quite come to fruition in a meaningful way. Could this time be different?
Yes, in fact, there was a talk of FTA between UK and India some time back. That has not yet materialized. But I guess this time around, to answer specifically your point, I think the companies in India should benefit. If at all we are talking about one of the largest companies shutting down in Bangladesh and therefore the business going to other companies, the stable companies in Bangladesh will benefit, plus the companies in India should benefit as well. So as I said earlier, if there is, if I to a hypothesis of a boardroom discussion in a retailer's office in UK or US, and they look at global geographies, they would actually right now look at India more favorably in terms of allocating more mobilization from in terms of buying from India. So 12 to 18 months, Indian companies should benefit from this trend.
Okay, and how are you going about this? Are you exploring ownership of manufacturing units in India? Or what's the progress on that? How quickly would you move if at all an opportunity were to come up?
So for me, these are two distinct things. As I said, early part of 2022, Sri Lankan crisis, PDS has grown very strong there because our banking is all done out of Hong Kong or Dubai from stable financial markets. In Bangladesh, I have two factories up and running, financially stable, well funded through global banks from Hong Kong. So therefore, we are well poised to reap the benefit if at all our factories benefiting from weaker factories. But I am a believer, yes, there would be traction in India. PDS has been very actively pursuing that it may like to acquire majority stake in a manufacturing unit in India. And I think in a reasonable span of few months, we should be able to get that into a fold. What that means for my business, we are able to, by having one manufacturing in our ownership, by demonstrating that to our customers, we are able to mobilize 7 to 8 times of that in terms of doing business from contract manufacturers that we bring on our platform. So yes, we are actively pursuing an acquisition in India. It could be in the vicinity of 300-400 crore top line, but on that basis one may actually look at PDS doing 3,000 to 4,000 crore plus business in the next 12 to 18 months from India.
And okay, so combined with the fact that you are in a stable position in Bangladesh, banking is safe in many cities, and additional 3-4 thousand crores or total 3-4 thousand crores from India. Just trying to understand, Sanjay, what would you do in terms of growth outlook? Because I see that from nearly 6,000 odd crores as of FY22, March 2021, FY22. In the next 2 years, you went up to almost 10 and a half. You stayed there in the last year as well. What is the outlook like in terms of growth?
It has been our ability to read through what is our retail customer thinking when they are wanting to do more and more outsourcing from third parties. Retailers have been shutting down their offices in the regional part in Hong Kong and other locations, trying to save costs. So PDS, went back to Blackboard and, worked from scratch something called sourcing as a service. Like, let me run your offices in this part of the world. That was one thing. There are more and more brands, retail brands, getting acquired by well-funded companies in US. So they are looking at somebody to manage the back end. So we have been creating growth out of the changing needs and expectation of the retail customers. That is one, in terms of our growth. Secondly, PDS, barring the last 12 to 18 months, have been deriving a large part of its revenue from UK and EU markets. We have increased our focus on US markets as well. So with our kind of offerings that I just mentioned as few examples, and given the low base impact that we are starting from in US, we believe a double-digit growth, in terms of mid-teens, is a sustainable number for us for the next 3-4 years at least.
But you've guided for 3 to 4,000 crore of incremental revenue in the next 12 to 18 months. I just want to clarify that. So mid-teens, 3 to 4 years, 3 to 4,000 crore in terms of top line next 12 to 18 months, including an acquisition. Am I getting this right?
So acquisition of, say, circa 300 to 500 crore top line company,
Right.
PDS acquiring a majority stake, a maintainable mid-teens growth rate over a 3-4 year horizon. And if at all we all in this conversation are believing that there could be more traction in terms of retailer sourcing from India, we believe we are well poised. And if that materializes, there is a potential of 3,000, 4,000 crore kind of 12, 18 months run rate. By the end of this 12, 18 months, PDS would have catapulted to a position of doing that kind of sourcing for the retail customers. Yes, the three are true that you just mentioned.
And Mr. Jain, just with regard to current tailwind, how is demand shaping up US, Europe? Are you seeing meaningful recovery in Q3 over there? What's the traction there like?
See, the earlier part of this year, if I talk about a kind of May, June to September, October, the inventory corrections, that were the focus areas last year, that correction pretty much happened. So therefore, there was a replenishment that was happening at the retailer's end. And so that therefore led to a good demand. PDS itself has grown closer to 30% in the first 6 months. Our order books have also been looking good as compared to the same period last year. So that's one factor that led to demand this year. And as we see softening of interest rates, I think the cycle has begun. So that should also augment the customer sentiment. The stability that is expected now with post-US elections, post some measures, we all believe that the government there would be taking, to kind of boost the consumption. I guess the positivity is here to stay for a few more quarters in terms of UK and Europe and especially US markets. But I would still continue to be cautious. There have been disruption with respect to war in some part of the world, and while the outlook is positive, but I guess let's continue to be cautious for a few more quarters till the inflation actually start receding, the interest rate cycle see 2-3 more cuts, but in the near term positive, but would continue to be cautious.
Right. So my last question is with regard to the acquisition that you've spoken about, likely acquisition. What's the kind of size like for acquiring a manufacturing facility, 300 to 400 odd crore in terms of top line, or 300 to 500 crore in terms of top line? What's the kind of cost like that you're going to be paying out? And second, how are you going to fund it? Debt? You've also raised some equity, so how does that kind of shape up for you?
So on the second part, we have a strong balance sheet.
Right.
We successfully raised about 430 crores of QIP money. Otherwise, also the balance sheet has been stable. So I think from these means, we should be able to get it done. In terms of your first question, I don't anticipate the outlay to be any significant. We believe that two things. One is looking at acquiring a majority stake. So therefore, the existing owners continue with a decent ownership. So that's in line with PDS philosophy. So therefore, when we create value in that acquired entity, PDS as well as the existing partners benefit. So plus the strength that PDS brings as a platform in terms of bringing in best practices and business. So therefore, from a 300-500 crore top line, can I bring in more quality business? Can I help with my measures to draw 20-25% more productivity? These initiative, these trends allow me to get a very fair kind of valuation. So PDS never pays for exit. That has never been the case. Neither we would go out and pay expensive. So I guess let's see how things actually shape up when we come closer to completing the acquisition. But anything beyond fair multiples, we won't really take any step ahead.
Okay, well, thank you so much for all of those insights.